Welcome to the Prudent Pulse. Now, the 30-year Treasury yield hit its highest level since 2007 today, and the benchmark 10-year Treasury yield reached 4.68. So what is causing this major bond sell-off? Well, for one thing, the inflation caused from the war in Iran is looking increasingly sticky. Last week, we got an April CPI report that showed inflation is spreading beyond energy. Shelter costs, for example, unexpectedly rose 0.6%, and food prices rose 0.7%. The most troubling part of the report, though, was services. Service costs accelerated 1.2% in April alone. Furthermore, import costs jumped 1.9% last month, and oil prices are drifting higher after President Trump's meeting with President Xi in China yielded little to no progress on the conflict in Iran. Now, aside from inflation, the fiscal deficit is also putting pressure on yields. In April, the US government posted a $215 billion budget surplus, which is typical in April as tax collections come in. However, that surplus was $43 billion lower than last year because tax revenue collected was lower and government spending rose by $31 billion. At this point, this year's budget deficit is now expected to hit $2 trillion compared to $1.7 trillion last year. And that's the Prudent Pulse.